When you open a chart, you ask yourself three questions. What is the market doing? Choppy, trending, or consolidation? What are the most powerful levels in the market? Try to find the most important support and resistance. So previously I was working with support and resistance. Now I'm working with liquidity area. So that is also a kind of support and resistance zone. So I have changed my strategy right for now. Okay, what is the market doing? You see if it is choppy market, if it is trending market, if it is in consolidation. And I have noticed in my trading pattern that if I enter the market in consolidation state, then most of the time I lose the trade or I don't get the take profit enough. What are the most powerful levels in the market? The right now I'm using like liquidity area and supply and demand, which is also support and kind of support and resistance. So maybe we will discuss about this support and resistance in later in other chapters. But right now you can find any other videos to see about support and resistance. There are many videos in the YouTube that you can check out. What is the best signal to enter the market? And the best signal to enter the market is the character, break of the structure, fair value gaps. These are some of the signals to enter the market, but this was written when I was still on the trade. Take higher time frame candlestick to determine the next candle. So in lower time frame, so in higher time frame, you see the candle is forming like this. Okay, the candle is like this, and so the candle is like this, and this is let's say this one is 4 hour time frame, 4 hour time frame, and this is the candle that we have with this. So next candle for the from this what we know is next candle could be bearish. Next candle could be bearish. So this is the prediction that we can do. This because this is bearish hammer candle, we call this bearish hammer candle. So another candle can be something like this, and the trade may go something like this. So this is also the sign of trend reversal. Maybe you can see it in other videos about the candles. You can study in other videos about the candles. Okay. So this is the sign of trend reversal. So based on this also you can determine where the what the next candle could say. Always give the priority to the candle that the trend supports. For example, give priority to bullish pin bar candle in bullish trend, even though there is bearish pin bar candle stick formed. If the trend is bullish and this candlestick, you have to see in high time frame. So already in previous point I have discussed that take that high time frame candlestick. And if the trend is bullish, if there is a strong bullish trend and there is a bearish candle form, then take the trade. Then give priority to bullish candle. So, for example, there is a strong bullish trend. There is a strong bullish trend. Okay, so there is a strong bullish trend, and there you have another candle. This kind of candle has been formed. Then yeah, this is a bearish candle. You can say just like I discussed just before. We can say that another candle may be like this. Another candle may form like this. Okay, so yeah, it can form another bearish candle. But here is we have a strong bullish move. Strong bullish move. So even the previous also it was maybe like this. So here we have strong bullish move. So this candle, this is just a retracement. Another candle can again form like this. Another pattern can also form like this. So we can have this. So just because we have this bearish hammer doesn't mean that we have to the trend may be reverse. So there are other confluences also that we have to keep in mind. Now we are going to talk about break of structure. So break of structure, a valid break of structure should always close the candle above the wick of previous candle. So about this break of structure we will be learning deep in another chapter also. A valid break of structure should always close the candle above the wick of previous candle. So let me show you this in chart itself. Okay, a valid break of structure should always close the candle above the wick of the previous candle. To become a break of structure, the candle must close previous high or low. How to spot a break of structure? Identify the trend. Is it uptrend or downtrend? If it is uptrend, we are watching lows to break with the candle that closes above the lows of the recent low candle. If it is uptrend, we are watching the high to break with the candle that closes above the high of the recent high candle wick. Okay, and vice versa. So it's a downtrend. It's a downtrend. Let me just if it is downtrend, we are watching low to break with a candle that closes below the lows of the recent low candle wick. If it is uptrend, we are watching high to break with a candle that closes above the wick of the previous high. So let me explain here. So here we can see break of structure. Let me just move to left. Okay, so this one is the break of structure. So this is candle wick, and this candle has closed above the previous week of the highest candle. Another we have here. Another we have here with this candle. Another break of structure. Another break of structure. we have with this candle. So this candle has closed above the wick of this candle. Another break of structure. Where do we have another break of structure? So here with this red candle. So this candle has closed. This candle has closed. And now where do we get the another break of structure? From here straight to this. Okay. So and we will study about change of character also. So change of character, that is a different thing. So another break of structure. We have almost we had break of structure. We had the break of structure thing. Another we have this low downtrend. So this is the uptrend break of structure. Now let's go and see downtrend break of structure. Okay, let's see it. So lower low to become a break of structure. This one is break of structure because previous high closed by new high candle. Similarly for lower low, previous low should close by new lower candle. So here you can see this is not a break of structure because this candle didn't close below this. This way, this one is a break of structure. So another break of structure here. This is a new low form, new low, and this one. This one is the break of structure. We don't see this as break of structure because this candle didn't close. So we will move to another candle, that is this candle. So this is the thing that I am studying. Or what we can also see is just ignore this one and move to another break of structure. So this one is the break of structure. Break of structure, this one. So here also, okay, I was showing you the break of structure in downtrend. That trading view was free without signing in. That's why it closed. So another downtrend. So here we can see this is the break of structure. This is a break of structure. So low and candle closed with this candle, or else you can just grab it down and then close it with this one. Another low, we have another low here. So here, do we have break of structure here? Do we have break of structure? No, we don't have. Here, we don't have. So instead of this, where do we have the break of structure? We have low, and then we have this high. So this one is low, and here we have another break of structure. Another break of structure, again low and then high. So this is the new low form. So this one is another break of structure. Again low and new high. So this one is not the break of structure. So we have with this we have, because this one you can see with a little with a small points. This has this was the new low and new high. So another break of structure where we will find this one. No, this is not a break of structure. This one is also not a break of structure. And we have finally here this one is the break of structure. So this is the break of structure. I still say that you check other videos also for good break of structure. And we have here change of character that is found here. So this one is change of character. So change of character is different thing and break of structure is different thing. Okay, we will discuss about this change of character also in another video. Okay, now next is when entering the trade, better to enter from FVG, but always check order block, break of structure, and also check in higher time frame if there is FVG or not, and also in lower time frame. So I don't enter like this nowadays. I don't enter like this, but about the FVG. So fair value gap. What is fair value gap? We have we may discuss it in another video also. So here you can see that when entering the trade, better to enter from FVG to get fair value gap, but always check order block, break of structure, and also check in higher time frame. So nothing, this doesn't matter at all. Nothing matters at all. But when you draw the FVG, you check in higher time frame also. For example, okay, so about the FVG, let's say we are in 5 minutes. Let's go to 5 minute time frame and check the FVG. So here is the fair value gap. You can see there is a fair value gap. I think you already know about the fair value gap. So this is the fair value gap, and when you draw the fair value gap, check in higher time frame also if there is fair value gap or not. So yes, we can see there is a fair value gap here. So we can consider this as fair value gap. So how to draw fair value gap? Previous wick of the candle and new after the candle there should be another candle and there should be a gap. So here we don't have fair value gap. We don't have, because this week here there is no any gap. Okay. So this is the fair value gap. So when entering the fair value gap, checking high time frame also. So I'll just quickly show you what is the fair value gap. So in an uptrend, let's say you are in uptrend. So this candle has formed, and fair value gap can be created with the help of 3 candles. So this another candle. We have another candle here and another candle here. So this area. Let me finish. Okay. The gap between this point, this lower wick, okay, lower wick and this wick. So this area is fair value gap. This area is fair value. But and if this was below here, then it would be this. And let's say above here, then we don't consider this as a fair value gap. We will still see the wick, and if this wick was over here, okay, and this candle here, we don't consider this as a fair value gap. There is no fair value gap at all here. Okay, so this is about the fair value gap. So part 2 is also done, and I'll make a different video about fair value gap. About the fair value gap. So there, I think there will be trading notes also, and in trading notes there will be a different video telling about different things. Like in next video there will be we will discuss about fair value gap, and next video we will discuss about liquidity. What is liquidity? And yeah, this is the so these are the different things. Liquidity. After liquidity, we have this risk management also. We will discuss about this risk management, discipline. So these are the things we will be discussing. There are other things as well. We will be discussing in different videos. Okay guys, thank you for watching.